Hello, everybody. This is Lori Fredrickson from Bivio, and I'm here with Becky Cruz and Joanne Hermiston and Iris Smilovitz, and we're going to talk today about auditing your club records. So thank you for joining us. Today's webinar is about auditing your club records. We asked you when you registered whether you plan to do a club audit and why. I wanted to share two responses anonymously from the comments that we got. This particular club said no, they weren't going to do an audit, and this was their reasoning. We show the TD Ameritrade statement and match it up to the bivio's valuation report every month. We've balanced every year for 21 years. So that sounds pretty good. This club answered yes, and this was their reasoning. We didn't audit for years, and it was nasty. Mistakes got compounded. I hope that once you've seen this webinar that you will see why the first club's reasoning for not doing an audit was faulty, because those checks they were doing would not have verified all the different aspects of their accounting. Our goal in giving you a way to do a comprehensive club audit is so you can avoid the mistakes the second club had to learn the hard way. You know what? People who are members of investment clubs often are people who like to learn new things. In my experience, members have enjoyed participating in the audit process because they learn new things about their investment club accounting. So what is an audit? An audit is a verification of the accuracy of your club's bivio records by those other than the club treasurer. You do an audit for a variety of reasons. For example, you should know that your treasurer is doing what you think they're doing with your club finances. This is an especially important question if it seems like they've been taking a lot of beach vacations lately. You want to make sure that your taxes are prepared accurately. Your taxes are prepared from the data in Bivio. You need to know that that is right. Just because your Bivio site shows a lot of numbers doesn't mean that they're useful for anything. Without verifying them, your taxes may be just garbage in, garbage out. And just a reminder that all of your club members will be held responsible if you don't file correct taxes. You also want to make sure that each member's ownership is being tracked accurately so that income and expenses are divided up correctly and the tax status of your account is being tracked correctly. And finally, it's important to demystify your club's finances and spread the burden of making sure your club is keeping accurate records. Your club treasurer has a big responsibility because your club has to comply with partnership tax requirements. Unlike your investing activities, the IRS is not as forgiving in terms of you being a novice doing that. It's important that every club member have a general understanding of what club accounting is about and what can and cannot be easily handled by your treasurer. The simpler your club finances, the simpler your audit is going to be, and there's no reason not to keep things simple. There are several types of regular verification that should go on in your club. Each is a little bit different, but they all interrelate. Every month, your club treasurer should do a monthly reconciliation. This should go very quickly. They just need to confirm that cash balances and number of shares of stock agree with what's shown on your brokerage statement. They should also have you confirm that your member payments were recorded correctly. A brief report on these things should be part of the treasurer's report at your club meetings. These two quick checks won't find all the issues that might be wrong in your accounting, but they will highlight most of the common ones and allow you to address them in a timely manner. Yearly, we recommend first that you do an independent audit. This should be done by an audit committee, which does not include your treasurer. At tax time, your treasurer will do a final check to verify that your 1099s agree with your club records and what is reported on your tax forms. These checks may sound like a lot of work, but if you use AccountSync to make entries in your records, you set up your record keeping to be simple, and your treasurer verifies everything monthly, any year-end verification should go very quickly. Today, we're discussing in depth how to do your club audit. Our treasurer training webinars get into more details about doing monthly reconciliations, and our tax preparation webinars will be getting into further details about what to look for on your 1099s. So when should you do an audit? We recommend that you do it in January. Why is that? Well, first, your regular December end-of-year brokerage statements are ready, so you'll have information for the full year to compare to your bivio entries. The biggest step in doing your club taxes is getting your records in shape. If your records are verified in January, doing taxes in February when 1099s arrive will be a very quick process. Besides, what else do you have to do in January? For those who get antsy about getting taxes done, an audit helps fill the time till taxes can be prepared. For those who live in cold climates, who wants to go outside in January? You can do your audit inside where it's nice and warm. So what exactly are you going to do during your audit? You're going to compare the entries that you've made in bivio to your financial institution records. You do this using reports and transaction lists from bivio and statements and summary lists from your brokerage and your bank if you have a bank. How do you do the audit? Well, first you pick a date. It'll probably take you around 2 to 3 hours to do it. Then you pick 2 to 4 people other than the club treasurer that are going to actually conduct the audit. Prior to the audit date, the treasurer should gather records that will be needed for comparison from your financial institutions and from bivio. On the audit date, the auditors will work through the audit steps, making the records comparisons. If they find any discrepancies, they will note them on the audit checklist. Auditors do not make corrections themselves. When all the steps are completed, the auditors and the treasurer will meet to discuss anything that was found. The treasurer will determine what action is needed, make the corrections, and record the action taken. Then the treasurer and the auditors will give the final report to the club. It actually all goes fairly quickly. Once you've got it done, you'll have done most of the work needed to get your records ready to prepare your club taxes quickly. All you need to do is wait for your 1099s to arrive so your treasurer can do a quick final records check. To help you do your audit, we provide you with an audit checklist which gives you the steps to go through. You'll find a link to it on our help page. It looks like this. You can see here's the cover, and it's got instructions. It's got a full list of the different records that you're going to need to collect to do the audit. And then there are 7 steps. For each step, it gives you a detailed description of what you need to be comparing. The first part of your audit is gathering the information that you'll be comparing. As I just showed you, you'll find a list of what you'll need in the audit packet. Things you'll need from your brokerage accounts are things like monthly statements, trade confirmation records. You might have individual ones, or your broker might be able to give you a summary list of them all. You'll need dividend and interest transaction records. You can find these on your monthly statements, or again, you might be able to find a summary list on your broker's online account. You'll need a realized gain and loss report. This will show you the capital gains by lot sold that your broker will be reporting to the IRS. It may have a slightly different name at some brokers, such as a closed tax lot report. An unrealized gain loss report. You'll need this if any of your stocks went through a reorganization, such as a split, spin-off, merger, redomicile, etc., or if you paid out any withdrawals with stock. Again, this one may have a slightly different name at your broker, such as an open tax lot report. This one shows the cost basis detail for each lot of each stock that you still own. For any checks you've written, you'll need something to verify that the checks were actually paid by your broker. Proof could be copies they provide or a summary list. Your treasurer may be the person who is most familiar with both your financial institution records and with using bivio. so they may need to help you find and gather this information. Sometimes one of the learning experiences about doing an audit is learning the types of information and the way you can get it from your brokerage website. Here's some examples of some things that you'll find there. You're going to need your monthly statements. This is an example of a TD Ameritrade site. And in this case, you get them by clicking on this My Account link, which opens this drop-down menu. And from it, you select the Statements link. Obviously, if you have a different broker, you won't see the same screen layout, but you're going to be able to find all this same information somewhere on your broker's website. So when you click on this Statements link, you go to this page, and this is where you can download all of your monthly statements. At TD Ameritrade, if you go back to the My Accounts menu, you'll see a link called Cost Basis. This is how you get to this page where you can get to realized and unrealized gain and loss reports. You can see the different tabs on this page. The information shown on the realized gain and loss tab is your cost basis and capital gain and loss for any stocks that you have sold during the year. As we will see later, this can be compared with the capital gains report in bivio to make sure your capital gains and losses will be reported on your taxes the same way your broker is showing. It's very important that you know how to find this report. On this site, if you see a little green dot next to any of the tickers, it means that you sold more than one lot of the stock. So in this case, the club had bought this company 3 different times. So that gave them 3 different lots of this stock. In this case, you just click on the little green dot and it expands this listing so you can see the details for each lot separately. If any of your stocks went through any reorganizations during the year, such as splits, spin-offs, mergers, or there were reclassified distributions, or if you transferred any stock to pay a withdrawal, you're also going to need a report called an unrealized gain and loss report, because those actions are probably going to have affected the cost basis of the stock you still own. In TD Ameritrade, you get to it by going to this tab. You'll get a page that looks like this, where you can see the cost basis details for each lot of each stock that was affected by the reorganization. You'll be comparing this to an investment lot cost basis report in bivio to see if you've recorded it as your broker has. During your audit, you'll be looking at specific types of transactions in bivio, such as dividend payments. What's nice is that you can often get lists of just specific types of transactions on your broker's website. In this case, you find those by selecting this transaction links from the My Account menu. This opens a page where you can select to see lists of certain types of transactions. In this case, we want a list of the dividends we've received during the year. Make sure you have the year right. We'll be able to easily compare this list to some of the bivio reports as we do the audit. It's important that you become familiar with finding all this material on your broker's website. Finding it will obviously be a little different for each broker, but it will be there somewhere. Contact your broker if you need help finding something that you need to do your audit. You'll be comparing your brokerage information to a variety of reports that you'll find in bivio. First of all, you'll be using a valuation report, which is the first one shown on this reports page, and end of year valuation. And on this report, you look at things like the number of shares of each stock that bivio is showing, and also at your cash balance for any accounts you have listed here. So you should not have cash balances listed here if showing accounts that you don't really have. But this number should agree with what the broker shows as a cash balance. You'll be using this transaction history report to audit specific types of transactions, such as the dividends you've received. This report is nice because it's got things in categories. So here's just the interest entries that have been made for the year. Here's all the investment transaction entries that were made for the year. And you can see here's all the dividends received. And this is nice because you can compare this to that dividend list that I showed you earlier that you can get from your broker. You'll be using an income statement. This shows you total dividends by company. You'll be using this member contributions and withdrawals report. This shows you the amount each member contributed during the month, and it also shows the valuation date that was used to record the contributions. The capital gain and loss report shows you whether your cost basis information and gain loss information agrees with what your broker will be reporting to the IRS. So this is the one you'll be comparing to that realized gain and loss report from your broker. This investment lot cost basis report shows you the cost basis of each lot of each stock that you still own. So it shows you the acquisition date of the lot, the number of shares in the lot, and the total cost basis for the lot. So this is the one you'll be comparing to the unrealized gain and loss report from the broker. If you've had any withdrawals, down here there's a link for withdrawal reports. So you can open these up and you will see what parameters we use to enter the withdrawal. And this is something you'll be checking against your partnership agreement information to make sure they were done right. Another thing that's useful when auditing or looking for issues in your club accounting in general are what we call transaction lists. And there are transaction lists for each of these first 3 items on the accounting screens. So for example, if you go to this accounts page, this shows your accounts. If you click on the name of the account, this opens a chronological list of all the entries that were made in this account. And there's a running balance over here of your cash balance. So this is helpful sometimes when you're trying to find a specific entry that was made. The same holds true on the investments page. If you click on the name of an investment, it'll open up a list of all the entries that have been made for this investment. And if you go to the members page and click on a member's name, you'll see all the entries that have been recorded for this member. So those are very useful. You don't get to them from the reports page, but it's good to know they're there. We use these all the time. You might also need to refer to files that you've stored in your files area, which you find here under the communications menu. For example, good things to store there are receipts for expenses, your monthly meeting minutes, where you should find votes where you authorized expenses, and also stock transactions. And you may also find details about withdrawal discussions in those minutes. And you should probably have your partnership agreement there. This is where you should find your club's terms for paying withdrawals, and it may also show you what methods you have agreed to are acceptable to allocate expenses to your members. Once all your records are gathered, the information is given to the auditors. The audit guide includes 7 steps that we recommend that they do to verify your club records. They are to verify that the cash balance and number of shares of stock at the start of the tax year and at the end of the tax year agree with what the broker shows. Verify that all your income received was recorded correctly, that any expenses you had were recorded correctly. Verify that all your stock transactions were entered correctly and that capital gains and losses are being calculated correctly. Verify your member payments were entered correctly, so your member accounts are being tracked correctly. And verify that any withdrawals were paid according to your club agreements and that they were recorded correctly in your records. Next, we'll go through each of these steps in more detail. We're going to talk about why you do it, go through an example of how to do it, and then discuss what to do if you find any discrepancies. Just one logistical note. In these unusual times, many of you are asking how you can do an audit if your auditors cannot physically get together. Well, here's just an example of an idea that my club uses. We upload the reports we need to compare into our files area in bivio. For example, you can see here that the reports needed to do each step, both from the broker and from bivio, have been captured into folders corresponding to the audit steps. With this information, members can log into bivio and get the information they need to make the audit comparisons. We do it together over Zoom, but you could also assign a different club member to make the comparisons for each step. Two people could even work together over the phone using information they had gotten from your bivio site to make the comparisons. And with that, I'm going to turn this over to Joanne to start discussing how to actually do these different steps.
Okay, well, your first step of the audit is to confirm that you started out the tax year with correct records. To do this, you'll be comparing the brokerage statement from the end of the prior tax year to the bivio valuation report with the same date. Here's an example of doing this comparison. First, you're going to compare the cash balances shown in bivio to what is shown on the broker's report. They should be equal, or you should have a good reason, such as an outstanding check, to validly explain any differences. If you see cash balances listed for accounts on the bivio report that you don't actually have, then you have issues you need to correct. The only balances shown should be for accounts that you actually had at the end of 2020. Then you'll compare the number of shares of each stock between bivio and your broker. The number of shares should agree exactly. There might be slight variations in market value by maybe a few pennies. This is not a problem, and there is no reason to try and find anything to fix. But if there's a big difference, you should investigate further to make sure you don't have investments without current prices. In this case, you will see a note on your valuation telling you that some of the stocks don't have current prices. This is also a problem that needs to be investigated and addressed. Your club accounting is based on accurate valuations. If there is a stock price that is not being updated regularly, then your records and your taxes will not be correct. This is a very important step. Why do we do this step? Well, because if the start of the year numbers for cash balance, number of shares, or the stock price are wrong, then there's no way the tax year numbers will be correct. What do you do if you find a discrepancy? You need to stop the audit at that point and assess the situation. There are many things in your club's historical transactions that are still affecting your current record keeping. A problem at this point means there are issues in your accounting that needs to be addressed. They could be as simple to fix as a small adjustment or as complicated as filing amended returns for your club for prior tax years. Feel free to contact us in support if you find a problem and are not sure what to do to address it. If you get past step 1, it's fine to move on to the rest of the audit. In step 2, the same comparisons are made, but you use reports dated at the end of the tax year you are auditing, which would be 2021. Why do you do this step? If the numbers don't agree, it will give you an indication that there are items you need to find. Going through the steps of the audit will bring out what they are and where they are. Once you've found them, you'll give them to your treasurer to fix. So for step 2, even if you find a discrepancy, you do not need to stop. Make a note of it and move forward with the next steps of the audit. Just a note at this point, as we mentioned before, comparing cash balance and the number of shares of stock, like we do in steps 1 and 2, is something your treasurer should do every month to reconcile your accounts. If you do this, you can have a reasonable degree of comfort that throughout the year, your bivio records are being kept correctly. But they don't tell you everything, which is why you're going to audit the information outlined in the next steps. So step 3 is where you verify the entries for any income you've received. This will be dividends and interest. You'll be using a bivio income statement report and a bivio transaction history report. From your broker, you'll use your brokerage statement and a dividend transaction list. First, you'll compare the dividend and interest totals on the income statement to those on your brokerage year-end statement. Note that interest on money market accounts may show up as dividend income on your broker statement. Make sure it is correctly identified as such in your bivio records. Next, you'll compare the specific entries using dividend transaction lists from the bivio transaction history report and a dividend transaction summary list from your broker. You'll confirm that the date of receipt, the amount, and the company who paid each dividend all agree. Why do you do this step? Well, you have to pay tax on this income, and the amount and dates need to be recorded correctly so the tax program will be able to classify and report it correctly as qualified or non-qualified on your taxes. What do you do if there's a discrepancy? You should proceed with the audit, and you need to note entries where corrections are needed. A club usually has very few expenses, but expense entries are commonplace in accounting where fraud can occur. In this step, you will make sure that they were both authorized and actually paid, and they were recorded correctly. To do this, you'll need meeting minutes to show expenses were authorized, and you'll need receipts that you have stored in your file storage area. You need canceled checks or a summary list from your broker, which will show whether expenses were actually paid. These will be compared against a transaction history report from bivio. You'll also need to know how your club has agreed to allocate expenses. By default, and per IRS regulations, expenses are allocated in proportion to ownership share. If you want to allocate them equally to each member, you need to make sure this method is specifically called out in your partnership agreement. If you've recorded any expenses in bivio, you'll find a link on the income statement report, which takes you to a listing like this of what was recorded. Make sure you have meeting minutes that show where each expense was authorized and a receipt to show it was actually paid. Just because expense entries were recorded in bivio doesn't mean they were actually paid to the proper recipient. To confirm how expenses were allocated, go to the transaction history report. If the note on an expense entry indicates that the expense was allocated equally, make sure that is allowed by your partnership agreement, and that is what was agreed to for the expense recorded. So why do you do this step? It verifies any expenses were authorized by the club and were actually paid. It also verifies that expenses were allocated to club members in the method your club has agreed on. That will ensure their member accounts in bivio will be updated correctly. What do you do if you find a discrepancy? Again, you proceed with the audit, and you need to note entries where corrections are needed. And now Becky will continue with the next steps of the audit.
Thank you, Joanne. Step 5 is done to verify that all your stock transactions have been entered correctly. You want to do this so you know that the value of your portfolio is being tracked properly and that the capital gains and losses when you sell stock will be calculated and reported correctly on your taxes. You'll be using a variety of reports to do this step, both from bivio and from your broker, including the bivio transaction ledger report, the bivio capital gain and loss report, bivio investment transaction lists, a bivio transaction history report, and a bivio investment lot cost basis report if you had any reorganizations during the year. From your broker, you'll be looking at brokerage trade confirmation reports, brokerage realized gain loss reports, and brokerage statements for months where reorganizations occurred, and an unrealized gain loss report if you had any reorganizations during the year. Let's look at exactly what we'll do with all this information. Step 5 has 3 parts. In the first part, Part 5A, you will verify that purchases and sales were entered correctly. Then in Part 5B, you'll verify that the capital gains and losses shown in bivio agree with what your broker shows. Finally, in Part 5C, you will verify that reorganizations were entered correctly and also verify that any cost basis adjustments agree with what your broker shows. In Step 5A, you should compare the stock purchases and sales in the bivio transaction ledger to a summary list of purchases from your brokerage. You want to make sure these things agree. the purchase and sale prices and number of shares at your broker and in bivio, the purchase sale dates at your broker and in bivio, and the total net amount at your broker, and in bivio, the total cash. Next, you'll confirm that your capital gain and loss information in bivio agrees with your broker. Brokers will be reporting your cost basis and capital gains to the IRS. It's important that all details for any stock sales you had during the year agree with what they show. To do this, you compare a report all brokers will now provide you at any time during the year, called a realized gain loss report, with the capital gains and loss report bivio provides you. Here's an example of the bivio capital gains and losses report. And here's the realized gain loss report from the broker. You need to compare each sale shown on the bivio report with the same sale shown on the brokerage report. You should make sure the acquisition date, the sale date, sales price, cost basis, and gain and loss agree between the two reports. If they don't, or if you see a wash sale noted, make a note to discuss this with your treasurer. They'll need to determine the reasons for any differences and make any corrections needed. Next, you need to confirm your records were correctly updated if any of your stocks went through a reorganization, such as a stock split, spin-off, or merger. These can get complicated, and it's important that they be entered correctly in your records. How will you know that there's been a reorganization entered? There are several clues that will alert you. First, there's a section on the Transactions History Report that will show you if your treasurer has entered a reorganization. If you don't see anything there, you may have found that the number of shares of stock didn't agree with the brokerage statement when you did step 2. This could happen if your treasurer had not recorded a reorganization. Finally, whomever in your club is watching each stock should make sure that the club was alerted when news of the reorganization came out. You should ask your club members before the audit to double-check the stocks they're following. To assess what has been entered, find the brokerage statement for the month the reorganization occurred and look at the transactions that are listed. Make a note to ask your treasurer how they determined what to enter. If there's any doubt about an entry, feel free to ask bivio support for confirmation. We'll do any necessary research and make sure correct entries are made for you. When a reorganization occurs, the cost basis of the shares of stock involved in the reorganization will change. If the reorganization has been entered correctly, the cost basis of all shares after the reorganization will agree between bivio and your broker. If it doesn't agree, there are issues in your bivio accounting that need to be investigated and addressed. If you found that one or more of your club stocks went through reorganizations during the year being audited, there's a few extra checks that you need to make. You need to compare information on a broker's unrealized gain loss report to information on the bivio investment lot cost basis report. You want to run this report on a date right after the reorganization happened. For instance, in 2019, Dow Chemical went through a series of 3 reorganizations, and clubs that owned those shares ended up with 3 different companies: Dow, DD, and CTVA. You should compare the following things between the 2 reports: the number of shares of stock in each lot, the open date for each of the lots, and the total cost basis for each of the lots. All of these details should agree. If you're doing automatic dividend reinvesting or have bought a stock on many different occasions, you need to make these comparisons for each lot of each stock. Entering reorganizations correctly can be one of the most difficult things your treasurer needs to do. Part of what you receive when you have a bivio subscription is access to experts that can help you account for them correctly. It's important to make sure reorganizations have been updated in your records in a timely manner. Your treasurer should do these checks right after any reorganization is entered in your accounting. If these issues are not addressed in a timely manner, it can become extremely complicated, time-consuming, and possibly expensive to straighten them out if they've affected subsequent transactions. Here's a list of some of the many reorganizations we've helped clubs make entries for this year. As you can see, there were a lot of them, and many clubs were affected. You can get to this list at a link named Reorganization Cost Basis Adjustments on our help page. Note that these are only the ones we've addressed for clubs with questions, and there may easily be others. Why do you do this step? First, it verifies that all stock transactions have been recorded so that the value of the club is being calculated correctly. Your entire accounting and tax recording is dependent on accurate club valuations. Second, it verifies that basis is being tracked correctly so that correct capital gains and losses will be reported on your income, both for the current year and for future years. This is a very important step. Capital gains and losses will be reported on your 1099 form to the IRS. Your club information needs to agree with what your broker shows on them, and your club records need to be updated in a timely manner when cost basis changes occur. What do you do if there's a discrepancy? Proceed with the audit and note the entries where corrections are needed. Do not try and correct them yourselves, but make sure your treasurer works out your issues before you file any taxes. Step 6 confirms that your members' contributions to the club have been recorded accurately. This is important because these records affect member ownership, both the percentage of the club each person owns and the gains or losses that they've had from their investment in the club. They also will affect whether the correct amount of taxable income will be shown on each member's K-1 form. To perform the check, you'll use the bivio Member Contributions and Withdrawals Report and the Transaction History Report. You also might want access to your club partnership agreement. You'll be comparing these things to your brokerage deposit transaction summary list or monthly statements from your broker. First of all, your treasurer should require that all members review the annual Member Contributions and Withdrawals Report before the audit and confirm that what is shown as their contributions is correct. Keep a paper or digital record with your audit report to verify that they've done that. The audit committee should compare the report to a deposits transaction list or to your monthly brokerage statements to confirm that the payments really were deposited in your brokerage account. For example, here's a payment recorded in bivio on January 18th from Snow White for $25.01. And this entry on the broker's deposit transaction list confirms it was deposited. Here's another payment for $100.04. And there it is. And so on until all the payments are accounted for. You'll also want to check the valuation dates that were used to record the payments. First of all, you'll need to know the answer to this question. What does your club use for the valuation date? Usually clubs use either one per month or they set the valuation date equal to the date the payment was deposited. If they use one per month, you should see two things on a member contributions and withdrawals report. For a given month, they should all be the same, and they should not be the same from month to month. If the valuation date is chosen to be equal to the deposit date, you might see different valuation dates for each entry, but the dates you see should agree with the payment deposit dates on your brokerage list. This club uses a single valuation date per month. In March, we see that the valuation dates entered for Snow White and for Sneezy were different than the ones entered for the others. This doesn't look right. If the club only has one valuation date a month, they should be the same. It's something to note and have the treasurer check into. For some months, there's no payments recorded for certain members. Is that okay? Well, it might be if the total for the year for each member is correct. That's why you have each member confirm their totals. The final thing you want to do is to use the transaction history report to confirm that member deposits have been recorded as member payments, not as fees or miscellaneous income. You want to see that each listing in this section is identified as a member payment and not as a fee unless you had some unusual situation and you were charging a member a penalty. So in summary, why do we do this step? It verifies that all members are being given proper credit for their investments in the club so that their account is tracked correctly and that their taxes are reported to them correctly. What do you do if there's a discrepancy? Proceed with the audit and note the entries where corrections are needed. Your final check will only be necessary if you've paid out any withdrawals during the year. It will confirm that withdrawals were processed according to the terms in your partnership agreement and that the correct amounts were paid. You'll be looking at withdrawal reports that were generated in bivio when the withdrawal was entered, and you may also need to refer to your club partnership agreement. If you've transferred any shares of stock to pay withdrawals, you'll also need copies of bivio's investment lot cost basis reports generated right after the dates of the withdrawals, and you'll need copies of unrealized and realized gain-loss reports from your broker that show the number of shares, the purchase date, and total cost basis for each lot of each of the stocks that you still owned or sold after the withdrawal. To determine whether a withdrawal was paid according to the terms in your club partnership agreement, you will have to find the section describing the requirements and then review the withdrawal reports to make sure the entries had the proper withdrawal transaction date, the correct withdrawal valuation date, and the correct fee assessed, if any. You should also make sure that your club records had been reconciled before the withdrawal amount was determined. If they were not, you might see post-withdrawal adjustments listed in the section. If you paid any withdrawals with shares of stock and you still owned any shares of those stocks after the transfer, you have an additional check to do. You need to check that the correct shares were selected when the withdrawal was entered in bivio. You do this by checking that the lots of each stock remaining in bivio are the same ones your broker showed you still own after the withdrawal transfer. For example, the demo club paid out a withdrawal with shares of stock on June 2, 2021. They transferred shares of AbbVie, Google, Meta, and Microsoft to the withdrawing member. After the withdrawal was recorded, bivio showed these lots of each of the stocks remaining in the club and showed them on the investment lot cost basis report. An unrealized gain-loss report shows the cost basis details of each stock still owned as of the end of the year. Details of each lot should be compared to the bivio report to make sure they agree. Since the club had sold the rest of their Meta stock after the withdrawal, the cost basis details for each lot of it had to be compared against those details on a realized gain-loss report. They wouldn't show on an unrealized gain-loss report run at the end of the year. So why are you doing step 7? It verifies you've paid withdrawals according to the method agreed in your partnership agreement. What do you do if there's a discrepancy? Proceed with the audit and note the entries where corrections or future improvements are needed. If the lots of shares transferred were identified incorrectly when the withdrawal entry was made in bivio, that will need to be fixed by your club treasurer before your taxes are filed. If a withdrawal has been paid and you've paid the member the wrong amount, it may be impossible to correct payment amount discrepancies because the member has left and may have already received and cashed their check. It is also almost impossible to make withdrawal payment corrections in another tax year without creating other big issues for your club. It will be up to your club to determine whether to pursue making corrections, but do not do so until you make sure you understand all the issues this might create. You will probably not be able to fix past incorrect withdrawals, but at a minimum, you'll want to note discrepancies as recommendations for future improvement. This is the last step. To summarize, when you're done, you will have completed these steps. You will have verified the cash balances and number of shares of stock at the start of the tax year and at the end of the tax year, and make sure they agree with what the broker shows. You will have verified income received is all recorded correctly. You'll have verified that expenses you had were recorded correctly. You'll have verified all of your stock transactions were entered correctly and that capital gains and losses were being calculated correctly. You'll have verified member payments were entered correctly, so your member accounts are being tracked correctly. And you'll have verified that any withdrawals were paid according to your club agreements and that they were recorded correctly in your records. Once the auditors have gone through the steps, here's what should happen. They should discuss any discrepancies found with the treasurer and report those to the club. The treasurer should report on the action taken to make corrections, and everyone should sign off on the audit form. And you should pat yourselves on the back. It's party time. Congratulations on making sure your club records are in good shape. Now, just a brief note about club taxes. Doing an audit covers most of the work which needs to be completed to get your taxes done, which is making sure your records are correct. Once it's complete, there are a couple more things your treasurer will need to do to get your taxes prepared. They will need to do a final check to make sure the information on the 1099 forms that your broker sends agrees with the information you'll report on your taxes. We'll cover this topic in more depth when we do the tax prep webinar, but just to give you an idea, there are several types of 1099s. Your club should receive them by February 15th, but check your broker's website for their latest information on when to expect them. Forms 1099 DIV and 1099 INT report the amount of dividends and interest you've received. Sometimes there's information on them that will mean last-minute adjustments are needed to your bivio records. That will include things like qualified versus non-qualified dividend adjustments, dates on end-of-year dividend payments, and possible reclassification of dividend income. If you've sold any stocks during the year, you will also receive a 1099-B. This is where your cost basis and capital gains are reported. You'll need to double-check to make sure they are the same as your bivio records show. The work you did in step 5 of the audit should have found any issues you need to address, so your treasurer won't have to take time to address them when the tax forms are ready. It can be complex and take a long time to fix problems with cost basis. The sooner you find out about them, the more time you have available to get the help you need. Filing taxes is mandatory for all clubs. It doesn't matter how much income you've made or how long you've been in existence. The good news is that once your records are all correct, preparing your taxes is a very quick process. You answer a few questions and press a button. Then you review the forms, send them in, and distribute them to your members. The forms are due by March 15th, 2022. All the more reason to get in the habit of spending time now, in January, getting your records corrected so you can prepare the forms quickly when you get your 1099s and when the bivio tax program becomes available in February. Now, here's Lori Fredrickson.
Okay, so that's how you do an audit. If you followed our recommendations for keeping your club record keeping as simple as possible, you'll be able to complete your checks very quickly. If you have any questions as you're going through yours, the quickest way to get an answer is to email us at support@bivio.com. Please send actual copies of any broker's report that you are comparing to, and make sure to identify the specific issues that you have questions about. If you entered any questions during this webinar or in advance that were specific to your club that I haven't addressed, send them to us in support and we can help you work through them. The bivio tax program will be available in early to mid-February. We'll also be doing a webinar about how to prepare your club taxes on February 15th. You can sign up now for the webinar at www.bivio.com/club_cafe. Thank you for coming today. We look forward to working with you during this tax season.